Hello, everyone. Welcome to the Newsbrowse News broadcast. According to a report by GG Press, the European Central Bank, ECB, is widely expected to raise its policy interest rates during its upcoming Governing Council meeting on June 10 and 11, 2026. This would mark the first rate hike in approximately 2 years and 9 months since September 2023. The ECB is anticipated to increase its deposit facility rate by 0.25 percentage points to 2.25%. The primary driver behind this move is the acceleration of inflation in the Eurozone, with the Consumer Price Index rising 3.2% year-on-year in May, representing the fourth consecutive month of accelerating growth. Despite stagnant economic growth in the Eurozone, with GDP growing only 0.1% in the first quarter of the year, the ECB remains highly concerned that soaring energy prices, exacerbated by worsening Middle East tensions, will continue to spill over into broader goods and services. GG Press notes that this decision aligns with a broader shift among global central banks refocusing on fighting persistent inflationary pressures. According to a report from Sinyomanet, U.S. President Donald Trump and Israeli Prime Minister Benjamin Netanyahu engaged in a telephone conversation on Sunday. The call occurred in the aftermath of a missile barrage launched by Iran toward Israel, which was reportedly a response to recent airstrikes in Beirut. While neither the White House nor the Prime Minister's office has issued an official statement regarding the specifics of the discussion, the exchange follows high-stakes comments made by Trump earlier that day. Before the phone call, the U.S. president told Israel's Channel 12 News that he intended to advise Prime Minister Netanyahu against retaliating. Trump cited concerns that such a response could jeopardize ongoing efforts to negotiate a ceasefire between the United States and Iran. According to a report by the Liberty Times, Cuba's economy is bordering on total collapse as tightening U.S. sanctions drive a mass exodus of major foreign investors. Following a new U.S. executive order freezing Cuban military-backed assets and threatening secondary sanctions, international payment giants MasterCard and Visa have suspended card transactions on the island for non-U.S. tourists. The impact has heavily crippled Cuba's critical tourism and mining sectors. Spain's prominent hospitality giants Meliá and Iberostar have shut down dozens of hotels due to energy shortages and plummeting demand. Meanwhile, Canada's Royalton Hotels and Resorts has also shuttered its local operations. In the mining sector, Canada's Sherritt International, a critical player that has extracted nickel and cobalt in Cuba for over 3 decades, has suspended operations, recalled staff, and entered non-binding talks to sell its controlling stake. Experts note that while foreign companies previously tolerated the risks of the long-standing U.S. embargo for the sake of Cuba's rich resources and tourism potential, the combination of extreme domestic economic failure and aggressive pressure from Washington has now made the risk of investing in Cuba far outweigh the benefits. According to a report by Liberty Times, the Japanese government and the Japan International Cooperation Agency, JICA, are launching an initiative this summer to strengthen the energy supply network of the Association of Southeast Asian Nations, ASEAN. The project aims to help member states evaluate and establish public-private petroleum reserve systems. In this plan, the Philippines has been designated as the highest priority country for support, while Vietnam is classified as a priority country. Indonesia and Thailand are also included on the support list. The Philippines currently has only one operational oil refinery, leaving its energy security highly vulnerable, especially after declaring a national energy emergency in late March following geopolitical tensions in the Middle East. Meanwhile, ensuring energy stability in Vietnam is critical for Japan. as Vietnam is a vital manufacturing hub for Japanese medical supplies. By assisting these countries, Japan hopes to demonstrate a unique value in energy security compared to China, thereby deepening its strategic partnership with ASEAN. Over the next year, Japan will conduct comprehensive on-site evaluations of regional oil infrastructure and supply chains before publishing its final recommendations. That's all for this video. Thank you for watching. See you in the next video.